Hello everyone, and how are you all doing? So today we'll be attempting yet another past paper question for the ACCA Performance Management exam. The question we're doing today is from the September 2016 exam. It's the first question in section C for a company called Jungle Co. And the question is of a very commonly tested topic, which is the financial and non-financial analysis of a company. Basically, they'll give you a case scenario for a company with all this information up here with some financial details down below, and they'll ask you in the requirement to analyze the company. So as always, let's start by going through the requirement. It says, required, discuss the financial and non-financial performance of Jungle Co for the year ended 31st August 2016. Note, there are 7 marks for calculations and 13 marks available for discussion for the total of the 20 marks. So that's it, that's the requirement. And this is a very commonly tested topic in section C, so we need to be very comfortable with this, right? We have another video for this, for the question of best night co, and that also has a similar whole topic where they give you a company case scenario and ask you to perform financial and non-financial analysis for it. Okay, so both those questions are really good for practicing this topic. Ideally, you should be performing the analysis yourself, as in if go through one of those videos and then try to do the analysis yourself and compare yourself to the actual answer and see how well you did. Okay, it's not complicated, it's very easy, and in the question here we're going to demonstrate how you go about approaching such a question, because the requirement is very straightforward, right? It doesn't tell you much, it just tells you that 7 marks are available for calculations and 13 for discussion. One mistake that students do make is they go haywire and go into all the numbers and perform as many different types of calculations as they can. But that's not what the examiner is looking for. 7 marks are available for the calculations. You need to perform a calculation only if you're going to make a relevant point of discussion related to it. The financial and non-financial analysis needs to be beyond just the numbers. It needs to explain what's going on with the company, how it's performing, what issues is it facing, and so on. Okay? So the approach to such a question is going to be that you just start reading the case sentence by sentence, and then whenever you see an issue or any point of discussion, you then perform calculations related to that point and make your points accordingly, which we'll demonstrate in a bit. Now, for the purpose of this answer, I'm using an Excel spreadsheet because there will be calculations and it will be easier to follow on video if I use a spreadsheet rather than a word processing software where I have to go switch back and forth between the calculator and the answer. That being said, please do keep in mind that sometimes in the exam, instead of a spreadsheet, they might give you a word processing software as well. Either way, one key rule of thumb that you need to keep in mind as far as calculations go, please show your workings, whether it's a Word file or an Excel file. Show your workings, key in the numbers, so that the examiner knows exactly which numbers you use to calculate a particular ratio or a particular percentage. What that will do is that in case you accidentally make a typo, suppose you have a Word file and you're performing your calculation on your calculator manually, and then you just write the final answer in, and while writing the final answer you mistakenly put one number incorrectly. Your entire answer is wrong, and because the marker doesn't have any working to compare it to, he can't give you any marks. Whereas if you had put in the numbers you used to calculate the final number, even if there's a typo in the final number, the marker can refer back to your workings and still give you marks because you used the correct numbers. Okay, so please do keep that in mind. Right, so let's get started with the question. So you must start by reading the case scenario sentence by sentence. So it says Jungle Co is a very successful multinational retail company. Okay, it has been selling a large range of household and electronic goods for some years. 1 year ago, it began using new suppliers from the country of Slovak, where labor is very cheap for many of its household goods. Let's stop here, because this is the point of discussion. Last year, basically, they started using new suppliers from the country of Slovak, where labor is very cheap, for many of its household goods. So if we think about it, what do we expect to happen as a result? They're using new suppliers, cheaper labor. That means that you would expect their labor costs or at least some of their costs to fall when it comes to household goods, right? So let's see if that is the case. So if we go down, you'll notice that they've given us an income statement with revenue, cost of sales, gross profit, and so on and so forth. Okay. Keep in mind the different line items and the different notes that they've given, because those give hints on what they want you to calculate, right? They've given you notes for revenue, cost of sales, admin expenses. That means they likely have more details down below and they want you to analyze these numbers in more detail. Furthermore, things like net profit, gross profit always mean that you can calculate the gross profit margin or the net profit margin and make points for that as well, which we'll get on to in a bit. For now, let's go to the costs, right? That's what we're concerned with. So cost of sales, it says note number 2. So if you go down to note number 2, we have cost of sales, the breakdown for their different types of products. And for household goods, we can see that the cost went from 28.812 million last year, because there's numbers are in thousands, to 23.394 million, right? So they actually fell, and one of the reasons for this could be the cheaper labor from slab act, right? So we already have our first point that we can make. So now let's get to structuring our answer. So as always, we'll label which question this is. This is question 31. We'll put this in bold. There are no parts, that's fine, and we'll make this column separate from the rest of the answer. Okay, and in such an analysis, it's always good to have headings so that the marker can follow with what you're doing. Since we're making a point on cost, I would rather that we have the points on revenue above the point on cost, just to follow the structure of the income statement. So we can say cost of sales over here, and we can analyze. Now, we need to show that the cost of household goods has fallen in terms of numbers, but we don't show it by just taking the difference between the balance of the current year from the previous year. The market does not like that. Whenever you're showing the difference or movement in balances between 2 years, always show the percentage difference, okay? The market insists upon it. Do not show the absolute difference. So that's what we're going to do. So we'll have the column for 2016 and for 2015, or rather 20x6, let's just keep it consistent, and 20x5. Let's zoom in a bit so that it's easier for you guys to see as well. Okay, and whenever you have headings, make them bold, italic, underline, something that will make them stand out from the rest of the answer. Let's just put them in the center so that it looks better presentation wise. And all of these numbers are in the thousands, so it's important for us to mention that as well. Okay, now we'll just calculate the percentage change in each of these categories so that we can make all our points down below in this subheading, right? So we have household goods, we have electronic goods, we have cloud computing, and we have gold membership. Okay, and we'll have a column for the percentage change in all of these. So for household goods, we have 23,394 and 28,812. For electronic, 26,797, then 21,216, 4240, 1580, and 100 for gold membership, right? Now, it's always good practice when you're keying in a lot of numbers like this to not key in the total, but rather add up the numbers that you've keyed in, right? Why? Because you need to check if you made any typos. Now, if this number matches the number over here, 54531, 54531, it means I haven't made typos up here, right? So it's a good check, because typos are very easy to make when you're under exam pressure. So that's fine. Both those numbers check out. Now for the percentage change, how do we calculate that value? It's very simple. You take the value for the current year minus the value for the previous year over the value of either the current year or the previous year. It's up to you. Generally speaking, it's better to do it in terms of the previous year. So that's what we'll do here. Okay, and we'll just copy this formula, bring it down with Control D to each subsequent cell. Okay, and we'll format this in terms of percentage. So we have a 19% decline in household goods. So now we can make our point. The cost of sales fell by 19% in the category of household goods. Okay, one of the reasons, because there can be others, for this could be the fact that, and then we can now refer to our point up here, which was that Jungle Co began using new suppliers from the country of Slovak, where labor is very cheap. That Jungle Co began using new suppliers from Slovak, where labor is very cheap, thereby driving their costs down. Okay, so we have a mark for our calculation that where we showed the percentage change, and we have a mark for the corresponding analysis, right? Simple and straightforward. Okay, and this is how we'll continue to proceed. Now technically we can build on this point even further. Why? A general rule of thumb is that cost of sales and revenue should move hand in hand in theory, right? So if revenue goes up or down, cost of sales should go up or down, and sometimes vice versa. Now let's think of why that could be the case. Well, if you're using cheaper labor, what is there always a risk of? Whenever you're using cheaper materials or labor, there is a risk that the quality of the end product might be compromised, right? And what would happen if the quality of the end product might be compromised? Well, you might expect your sales to go down. So let's see if that has happened as well. So if we go back, now we can look at the breakdown of the sales by category. So if we look at household goods, once again, we can see that from 41 million, our sales have decreased to 38 million. So technically we can link this point here as well. We can say that one of the reasons could be that the cheaper labor resulted in a drop in quality of goods, resulting in a fall in revenue. So we're still at the same point, but now we've got two more marks, one for the calculation to show the drop in revenue for household goods, and one for the point that we're gonna make. So let's make a heading up here for revenue. We already have our format from down below. And the beauty of the computer-based exam is we can just copy paste all of this so that we don't have to bother with it again. So copy, paste, and let's just key in the revenue numbers now. So 38,990, 41,160, 41,870, 32,640, 12,400, 6,520, 1,400 and 2,000. Okay, and we can check 94,660, 82,320. Our totals match with theirs, so we got this, and we can now mention our point. The revenue for the household goods category fell by 5%. While this one of the reasons for this could be the fact that Jungle Co started using suppliers from Slovak, where labor is cheaper. Cheaper labor might be of lower quality, resulting in the quality of the final products decreasing, causing a decrease in revenue, right? So very elaborate explanation, but so after that, let's see if there's any other information which we can link this point to. Let's look at the rest of our numbers as well. So we have breakdown of revenue, breakdown of cost of sales. We have administrative expenses, where it says including in these costs are the cost of running the customer service department, and those have fallen as well. This department deals with customer complaints, so that has to do with customer complaints, not with this point. And then we have non-financial data, which is crucial as well. it says here percentage of orders delivered on time fell from 92 to 74%. Number of customer complaints went up. Okay, so this is an important point. Number of customer complaints is a really useful metric. Why? Because if it's going up, we can link anything bad with the and say that it's causing that increase in customer complaints. And if it's going down, we can say anything good is causing that decrease in customer complaints. Over here, we can see customer complaints have increased drastically. And one of the reasons possibly could be that they're using cheaper quality labor. So we can mention that with a heading down below. We can use the heading of non-financial data. Okay, once again, we can just copy we don't need the total here. We just copy these numbers, and the thousands column is not relevant, so we can remove that. So we have percentage of orders on time, we have number of complaints, we have number of customers, we have percentage of late gold deliveries, right? So let's just push this out a bit. Okay, so in this case, this was 74% and this was 92%. This was 1.4 million and this was 320,000. This is 7.1 million and this is 6.5 million, and this is 14% and 2%. Okay, 14% and 2%. Okay, so we can say the number of customer complaints increased dramatically by 338%. Okay, this could be due to several reasons, because we'll link other points to this as well, so we'll keep that structured accordingly. So we can mention 1, cheaper labor from Slovak has decreased the quality of the household goods, right? So we have our point over here as well. Okay, so we've already built quite a few points and quite a few calculation marks. Let's proceed. Okay, now let's just speed up a bit. So now the next point we have is, so after household goods, it says in 2014 Jungle Co became a major provider of cloud computing services by investing heavily in cloud technology, and cloud computing is one of their business segments, so we would expect a growth in that segment. Okay, these services provide customers with a way of storing and accessing data and programs over the internet rather than on their computer hard drives. Okay, and then the next point starts talking about gold membership. So cloud computing, if they've invested, we would expect the revenue to go up. Let's see if that's happened. Yes, we can see the revenue for cloud computing has gone up by 90%. So we put in all the hard work with all the calculations in the beginning. Now we can just quickly make our points. So we can say the revenue for cloud computing has increased substantially by 90%. The main reason for this seems to be the fact that Jungle Co has heavily invested in this area, Okay, now like we said, revenue and cost of sales should move in the same direction. So let's see if cost of sales has also increased. It should in theory if revenue has increased by 90%. And as we can see, cost of sales has increased by even more than 90%, by 168%. So let's talk about that as well. So we can see the cost of sales for cloud computing increased greatly by 168%, right? This is to be expected as Jungle Co heavily invested in this area to grow revenues, which would also result in higher costs. However, now from an exam point of view, these 2 points are more than enough, right? But just to show you guys the potential, we can analyze this in more detail as well, right? What can we say? Well, we can talk about why is the increase in revenue only by 90% and the increase in cost of sales by much more than that, nearly double of that, 168%, right? And we can say something like, well, it's a new business segment, right? And when you're new, think about life cycle costing in the market. Your costs are higher and grow faster than your revenue because you're still establishing yourself, you still are learning, you're still making mistakes. So that could be one of the reasons why costs are growing faster. As they become more experienced, then revenues will start to grow faster than costs, right? So we can mention that point as well. Okay, the costs have increased by a much larger percentage than the revenue. This is possibly due to Jungle Co being new in this market and still working on establishing themselves. Okay, so we have that point as well. Let's move on. It says all of Jungle Co's customers have the option to sign up for the Gold membership service, which provides next day deliveries on all orders. Next day deliveries, okay? And we saw there were lots of late deliveries later on. In return for an annual service fee of $40. In 2015, they formed their own logistics company and took over the delivery of all of its parcels instead of using services of international delivery companies. Okay, so last year they formed their own logistics company and now they handle their own deliveries, and we can see that that has resulted in lots of late deliveries. The percentages of order on time have fallen to 74% from 92%. Complaints have gone up and late deliveries have gone up significantly as well. And of course, that's expected. International delivery companies, well established, working for years, have more experience, will be more efficient than someone who's just entered the market last year. So we can make that point as well. And we would expect this to result in Gold membership revenues falling as well. Let's see if that happened. Yeah, so revenues have fallen by 30%, so we can mention that. The revenue for Gold membership has fallen drastically by 30%. This seems to be due to an increase in late deliveries caused by Jungle Co taking care of deliveries on their own instead of relying on established companies. Okay, so the revenue has fallen. Has the cost been impacted? No. So there's not really much we can talk about there, but we can talk about the percentage of late deliveries here and the percentage of orders on time, right? We can make points on these. So we can also talk about customer complaints. So we can mention here too the percentage of late deliveries has increased greatly, which would of course upset customers, right? So we add this point here and we can mention the percentage of orders on time and late goal deliveries have decreased and increased respectively. This is all likely due to Jungle Co handling the deliveries themselves now instead of using experienced delivery companies. Since they are new in this area, they will not be as efficient, right? Okay, so the percentage of orders on time and late goal deliveries have decreased and increased respectively. This is all likely due to Jungle Co handling deliveries themselves now instead of using experienced delivery companies. Since they are new in this area, they will not be as efficient. Okay, so we made quite a few points for this as well. Let's move on. It says over the last year, there has been worldwide growth in the electronic goods market of 20%. So, and after that it's talking about cloud computing. So electronic goods market has increased by 20%. We would expect our sales to at least increase by 20% as well. Okay, so we can, electronic goods is the second heading, so let's put the point in between here, in between cloud computing and household goods. So the electronic goods market increased by 20% worldwide, right? And let's see what happened here. These guys increased by 28%. So Jungle Co increased in this area by 28%, meaning that they exceeded the average market, right? And we can make a point as to why that is. Given the size of their sales, you can see it's probably their biggest segment with the most sales, 41 million of their sales. It seems Jungle Co is well established in this market and therefore able to take advantage of growth opportunities, right? If you're well established, when the market grows, you are likely in a better position to gain more market share. So we've made that point as well. Okay, and of course this would increase our cost of sales as well. Let's see if that's happened as well. Yep, cost of sales has increased very similarly by 26%. We can make a small point on this as well. Once again, let's just put it in between here. Cost of sales for electronic goods has increased by 26%. This is in line with the increase in revenue of 28% in the same category, right? So just a small point. Okay, after that it says average growth rates and gross profit margins for cloud computing service providers have been 50% and 80% respectively for the last year. So we'll now make the same points for cloud computing, but we also need to calculate their gross profit margin, because if they've given the gross profit margin here, they want us to compare Jungle Co's gross profit margin to this and see how they stack up, right? So first, 50% increase in the market for cloud computing. We already made the point that the revenue for cloud computing has increased by 90%. So we can just build on this point further. the market for cloud computing has grown by 50%, which is also likely a major contributor. Okay, so that's that. After that, 80% gross profit margin. Once again, we can also talk about the gross. Okay, let's calculate the gross profit margin in a separate heading. Now they've only given us the gross profit margin for cloud computing. If you want, you can potentially, if you have time that is, you can calculate it for all of the different areas, household goods, electronic goods as well, but I would say let's just do it for cloud computing since that's the only benchmark we have. So cloud computing, we can do it for both years. We simply need to take, now here we'll just link it to the numbers we've already keyed in above. So gross profit margin is we take our revenue minus our cost of sales. This gives us our gross profit. Divide this by our revenue, right? So we have all our numbers. We've just linked them together and we'll do this for both years. You can see the gross profit margin has fallen substantially from last year. Why? Because we saw cost of sales increase by 168%, revenue only increased by 90%. So that's the primary reason for that. We can mention that point as well. So first we'll mention the gross profit margin for cloud computing for Jungle Co is 65.8%. This is well below last year's margin as well as the market overall industry average industry margin of 80%. And we can just build on the point we previously mentioned. As mentioned above, it is likely due to Jungle Co being new in the market and working on establishing themselves. Given their heavy investment, costs are currently increasing faster than revenue. Once they establish themselves, the trend should reverse, right? So we've made our point here as well. Okay, and then the last sentence says Jungle Co's prices have remained stable year on year for all sectors of its business, with price competitiveness being crucial to its continued success as the global electronic retailer. This is a crucial point. Why? If the prices have remained stable, that means revenue has grown due to an increase or decrease. It's grown due to an increase in volume, or it's fallen due to a decrease in volume, right? Revenue is based on two things: the price of the product and the number of units you sell. If the price is stable, that means revenue is increasing either due to selling more units or decreasing due to selling less units. So we need to make this point, and since this point applies to all revenue, we'll make this point right on the top. The prices for Jungle Co have remained stable. This means that any increases in revenue are due to higher volumes of sales, and any decreases in revenue are due to lower volumes of sales, right? And by making this point right at the top, we're setting the precedent. Now the analysis and the marker will read this and then automatically keep this in mind when he reads through the rest of our points, right? Okay, so that's why we put it right on the top. Now let's just talk about a few of the other areas which we haven't been able to talk about so far. What are those areas? Well, first of all, we have we've talked about gross profit margin. We could talk about net profit margin. Let's leave that to the end. Let's talk about admin expenses and distribution expenses. Other operating expenses are really small, so we don't need to bother with them, I think. Administrative expenses have increased from 1720 to 2760, and we've already seen a note for them where it says included in these costs are the costs of running the customer service department, which has increased from 860,000 to 1.9 million, right? So a 1 million increase due to the customer service department, which handles customer complaints, and this, as we can see, is almost a 1 million increase, right? So that's the reason for it. And why has it increased? Well, they're dealing with customer complaints. Customer complaints have gone massively up, so we can mention that, right? So let's put this over here. Administration cost. Now, once again, you could put it technically anywhere. We're just trying to be consistent with the order in which the data is presented, right? Non-financial data is at the end. That's why we're keeping our analysis at the end, okay? But it's not really necessary. So let's just copy our format from above. We just need one, and let's mention administration costs. So the overall number went from 1720 to 2760. So this is 2760, 1720, 60%, right? And we'll just mention the point. Administration costs increased by around 60%. This is primarily due to the increase in running costs of the customer service department brought on by the massive increase in customer complaints, as we can see below, right? Because we've done the calculation below, so we're just pointing it to the marker that look below and you'll find it, right? That way the marker can easily follow what we're saying. Okay, so we have our point over here as well for admin costs. We're approaching around the 40-minute mark. Obviously we started we had the intro for a few minutes, so technically we're still well within our time limit for this answer. Let's just talk about distribution costs, and then I think let's be done with it. And net profit margin, let's just make these 2 points. Technically we have more than enough points, right? But sometimes in the marking scheme they want you to hit specific areas. So even though we made a lot of sub points in revenue and cost of sales and everything, we should not ignore any specific areas, because there might be some marks just allocated to them. Okay, so distribution costs have increased slightly. We can just briefly talk about why that could be. So let's just make a head area for that. So we have distribution costs, okay, and if you're running low on time, it's better to just move on to the next question, because we have most of our points already. The time will take you to make these extra marks. You can make far more, earn far more marks by doing a few MCQs quickly, or starting another section C question, right? So don't get bogged down on it. We're only doing this because we technically have time. 13420 and 13180. So 2% increase, not much. We can explain that they took things in-house. Usually you expect the cost to go down, but due to the late deliveries, they'll have to deal with the late deliveries and everything, so that might cause the cost to actually go up, right? The distribution costs have actually increased by 2%. This is surprising given that Jungle Co has been dealing with deliveries in-house, which usually results in cost savings. And we can mention that this means it's a bad move, right? This means that this was a bad move, as not only did it result in increased admin costs due to customer complaints, right? We're linking it to the point above, customer complaints, but also did not achieve the benefit of reducing distribution costs. Now, sometimes students will take this a step further and start making recommendations. It is recommended that they go back to international. No, they're not asking for recommendations. They're just asking for the analysis. You don't have to tell them what they should be doing. Just mention what they did and what the result was, okay? And finally, just for the sake of it, net profit margin, because if they've given net profit, that usually means they want you to analyze net profit margin, and they might have separate marks for it. So we'll just briefly talk about that. We'll do it in the analysis overall because they haven't given us the overall breakdown that we can use for each separate category. Net profit margin. Let's just copy the format for gross profit margin from above. Net profit margin. So in this case, we'll just key in the number directly, 23,809. Since we've already got the revenue number above, we can link this up there rather than keying it again. Okay, so over this, we'll copy the formula here, but just replace the 23,809 with 15,602. Okay, and we can make our closing point based on this because net profit margin is telling the overall picture. Overall, the net profit margin for Jungle Co has increased by around 6.2%, right? This indicates that as a whole, despite the issues that Jungle Co is facing, it was still able to take advantage of growth in markets and increase its overall profitability. Right, so that works as a good summary or conclusion point for it, right? So that's it, we're done. We don't need to go into any more detail, I think, but that's how we solve the question. And as you can see, our answer looks very well presented due to the use of headings. So we have everything structured, it flows, right? Revenue, all our calculations on top, followed by all the points in the same order. Then we move to cost of sales, same story, gross profit margin, admin cost, distribution cost, net profit margin, non-financial data, and so on and so forth. Okay, so I hope you guys benefited from this exercise, and I'll see you guys next time.